Good morning, everyone. Welcome to Pre-Bell with Team MarketSmith India. My name is Rajashekhar Kongari, Equity Research Analyst. Before we go ahead into this podcast, the disclaimer for this presentation podcast is that whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. Here is a Nifty's daily chart taken from our website. Clearly, the momentum is on the lower side. If you look at the markets, Nifty has closed in the negative territory in the last 7 trading sessions, which is huge in terms of price action. However, volume is on the slightly lower side. Institutional activity has come down. There is no major volumes happening in the market. The most of the decline is attributed to the Adani fiasco, which is happening in the markets. Otherwise, we would have not fallen this much when compared to the actual fall it happened. Also, if you look at the moving averages, Nifty has faced resistance. It is 50 DMA, which is a red line here, and 100 DMA was also breached recently. Uh, Particularly, if you talk about yesterday's action, it was very critical. Yesterday's action, Nifty reached its long-term moving average, which is at 200 DMA on intraday basis. However, in the second half, that is in the latter half the yesterday's trading session, Nifty found some buying and Nifty advanced nearly 100 points from the day's low of 17,300 levels. On almost 100 points, it has rallied and it reclaimed its 200 EMA. So definitely 200 EMA is going to be a crucial level going forward for the Nifty in the next couple of sessions as well. If that level is also breached, then definitely we might expect further selling happening in the markets because there is no major support for the market going forward. On the upside, there is a high overhead supply in the market. Lots of stocks are also having overhead supplies. HDFC, Reliance, and other major leading stocks have a lot of overhead supply. So definitely, the upward momentum is going to be a lot of resistance. Definitely, one should wait for the proper momentum happening in the markets. Otherwise, we might expect consolidation in the market as well because upside there is resistance, and on the downside, we might expect 200 DMA to find support the next couple of sessions or going forward. On the O'Neill front, yesterday we have changed the market status to downtrend from rally attempt. That is because following the O'Neill rules, recent correction low, that is the budget low, 17,353 was breached in the yesterday's session. As mentioned previously, yesterday's low was 17,300. So definitely a new low was made in the yesterday's session. So that is following O'Neill rules. We have changed the market status to downtrend. As we are in downtrend, we have exited our model portfolio stocks as well. Going forward, we will be waiting for the market to find a near-term support or near-term bottom. Yesterday's low will be very crucial going forward in the next two sessions. That is the today's session and tomorrow's session. If the Nifty doesn't reach yesterday's low, then we'll be changing a market status to rally item. From there, again, the same situation. That is, we'll be waiting for the follow through day to change the market status to confirm down. Until then, we'll be staying sidelines. We won't be adding stocks to model portfolio. However, we'll be shortlisting few ideas which are doing well in the market and which are resilient in the current market as well. Some of the stocks which are news and which will be under radar in the today's trading session are Sterlite Technologies has signed a business transfer agreement with its subsidiary for a cost of 15 crores. This is subject to working capital adjustments within the company. GIC Housing Finance has received an approval from its board for allotment of non-convertible debentures of worth 325 crores, which having a coupon rate of 8.7% per annum. And the issue will be on the private placement basis. Similarly, Tata Steel has also received approval from its board of directors, committee of directors for allotment of NCDs on private placement basis. The company will choose or identify investors by itself. and that the NCDs are worth around 2100 crores, and they will have a coupon rate of 8.03% per annum. In the last 1 month, if you look at LIC leading insurer in the company in India has declined more than 15%, and the companies out of top 10 companies in terms of market capitalization. Yesterday, institutional activity, if you look at foreign institutional activity, was very bad. They have sold more than 2,000 crores of Indian equities on net basis in the market yesterday, whereas domestic institutional investors have bought more than 2,200 crores of equities. If you observe, whenever foreign institutional investors are exiting the Indian market, domestic institutional investors are giving support for the market, which is very important. Otherwise, the fall will be more steeper, and it's very difficult for the market to find support. Overnight, US market closed in the positive territory, even though the backdrop of positivity was not higher. The gains were in the range of 0.2 to 0.6% for the major three indices, that is Dow 30 and S&P 500 and Nasdaq Composite. Asian markets are also trading in the higher territory. Shanghai is trading 0.2% higher, Nikkei 0.4% higher, whereas Kospi is trading more than 1% higher. If you take cues from SGX Nifty, SGX Nifty is also indicating a slightly higher opening, around 100-point higher opening in the market in the Nifty index. If the higher opening is sustained, and if the Nifty doesn't touch its 200 DMA, then definitely we'll be having a day two of attempted rally in the today's trading session. Otherwise, if the yesterday's low is breached, again we'll be back to downtrend, and we'll be waiting for the market to find a near-term bottom. This is a scenario of leading sectors in India as of yesterday's close. You can see Nifty is in correction, which was changed yesterday itself, and Nifty product indices, that is Nifty mid cap and small cap, are also in correction. So overall, the overall market is not looking very good. There is no broad market support for the market as well. So we would want broad market to outperform and give support to the overall market. That is not happening in the current market. On the sectoral front, if you see, most of the sectors are almost are in correction. Realty, pharma, energy, metal are in correction, and other than other sectors are in either in rally attempt or under pressure. None of the sector is in rally, which is a sign of concern here. So overall, the selling which is happening in the market is broad-based, not any sector-specific, if you observe. And most of the sectoral indices which were trading above their 50 DMS recently, that is one and a half month back, now have breached their 50 DMS. Again, a sign of bearishness happening in the market. 200 DMS are also keenly tracked, and most of the sectors such as Nifty Energy, if you look at particularly, it is more than nearly 15% of lows compared to 200 DMA, which is not a good sign. Nifty Energy has a that is Reliance has a high weightage in the Nifty Energy sector, and Reliance being a major leading or having highest weightage in the overall index, definitely will impact the Nifty movement. And Realty also is trading more than 8% below its 200 DMA. Other sectors such as Nifty IT, financial services, FMCG are pretty much decent, are really trading above their 200 EMS. Thanks for joining today's people. Have a good trading session. Also, today is weekly expiry of Nifty Financial Services, so one can expect volatility happening in the market, especially related to financial services companies. Thank you.